the other gamma squeeze we mentioned. You can see it went from an initial price of $14.70. It's traded a high prince today of nearly $18. So it gives you an idea that there is a bit of power in the late gamma squeezes. And the reason why there's a lot of power in the late gamma squeezes, Jack, is what reason? If you're going to scalp a gamma squeeze, what's the best time of the day to scalp a gamma squeeze? Should be pretty obvious, right? At the open, or certainly into the first hour or two. It gives you the whole day to scalp that gamma squeeze. Because what happens if you leave it in the overnight session? What do you pay? What do you pay? You pay theta, don't you? You pay that loss on your theta. You start encouraging losses to develop in that overnight session because it's costing you money to have that. So this is one of those things that we kind of mentioned that hold on a second. So this is one of the things that we mentioned, that when you get into that sort of that last hour of trading, Jack, when you get into that last hour of trading, it becomes more likely that it's a buy and hold for the overnight session, because why would you buy it with an hour to go, or why would you buy it with 20 minutes to go? Because it doesn't make any sense, right? Unless you're thinking that there's going to be an overnight spike. Whereas if you buy it early in the day, you've got plenty of opportunity to scalp out over the course of the day itself, yeah? So some of the early ones are great to trade, but this VXRT was a very late in the day trade. It was 20 past 8. I mean, you're not going to get an awful lot of opportunity to scalp a trade at 20 past 8 at night, you know, with only 40 minutes left before the cash close. So the market makers put in a real predicament at this stage, aren't they? Market makers are in a real predicament here, because what the hell did they do? They've only got an hour to try and think about buying shares ahead of the break here, and then obviously when it breaks north out of here, you've made a brilliant trade at that point. So some of this is about making sure you wait till as late as possible in the day to get it, because obviously they're more likely to be gap swings, and that's one of the things that you start paying attention to. Yeah, but when this opens here, the first trade everybody does is they start watching. If it goes up, they start leaving it. If it goes up and then it rolls over, they exit. If it goes down, they just cash it in, and it drives the price all the way back down, usually to a gap close. It's just an interesting concept, because there's a lot of traders that they like the idea of trading stocks as day traders. You know, they like the idea of, you know, not the lack of leverage, perhaps. They like the idea of still making a lot of money. They like the idea of having that ability to make 10% gains on one day, every day, based on something that's setting up like this. And if you can make 10% gains every day of the week, you're in pretty good shape, right? You know, you're not going to be in trouble if you can do that consistently, I'll tell you that much. What are we doing? There's a lot of selling on this FTSE again, guys. And the reason for that is because we're seeing continued selling on this sterling. So it's just getting pulled lower and lower and lower. The dollar still catching that bid, squeezing the euro down again into the bottom edges. And it's an ugly situation, actually. It's a little bit. It's one of those situations you look at and say, don't quite get it. I'm not quite getting my head round all the competing influences in this, because there's a lot of competing influences in this. Well, the interesting thing, Cliff, is this, that put options are generally more bullish than call options. That's the interesting thing that a lot of people don't quite understand, that if you look at the average of put options, they generally go up, and if you look at the average of call options, they generally go down. So put options are on balance more bullish than call options most of the time. And the reason for that should be pretty obvious. If you buy a large put option, the idea of gamma scalping is probably the most powerful, most awesome trade you can ever do is gamma scalp a down move. The only way you can gamma scalp that down move is if you're holding a put option, right? So put options result in a lot of buying. Call options result in a lot of profit taking, selling. And because of that, it's difficult to make money buying into a call option. You'll find that anytime there's any large call options, what normally happens is the price goes down. Anytime there's any large put options, most of the time the price goes up. It's those odd occasions where you get a call option and the market maker buys behind it. Those are the ones that are gold dust. But that's up to you to then find those. You know, we'll tell you that there's a call option, but you've got to then look at it and then analyze whether you think there's enough bidding coming in behind the call option to make sense, yeah? That's what happened on VXRT and SPC as opposed to any other ones. The first instant reaction by the market maker was to buy behind it, which suggests that hedging is, that gamma squeeze is coming into play, and that should result in a popper in the market space at that point. Yeah? Happy with that explanation, or is it load of mince to you? Are you not understanding? Everybody getting it?